All right, folks, happy Easter. It's Sunday, April 4th, 2021, and it's time for a monthly portfolio update. I'm only one day behind this time, so hopefully it's not too bad. But the market was closed for Good Friday and all through the weekend, of course. So really, we only had one day of trading in April. That was Thursday, April 1st. So this is still the March update for the portfolio. So where does the portfolio stand? Well, so far through 2021 year to date, so almost 3 months in, I should say a little more than 3 months in, my portfolio is returning 12.2%. This is compared to the S&P 500, which has returned 6.17%. So it's doing almost twice as well as the overall market. This has gone down in terms of the February outperformance when I was leading the market by 3 or 4 times as much. A big part of this is that I am concentrated in individual equities, and I've made some bets that has paid off, but it's also a much riskier move. So that's why I'm able to get the returns that I'm getting. You just got to take on more risk. But that's where we're sitting through the end of the first quarter. So I'm super thrilled. In terms of portfolio allocation, there are four big areas that I'm in that makes up more than 15% of my portfolio. And they are energy, consumer staples, technology, and cash. So three of those are equities, investments, and the fourth is just short-term cash waiting to get redeployed. So compared to last month, I was 22% cash and I've gone down to about 15%. So I've made some changes, and I'll talk more about those changes just in a little bit. But in terms of the overall allocation, it has remained mostly stable except for some of the moves from cash to other things that I started to pick up on. So over the next, I don't know, maybe 2 months, I'm thinking through June, I'm probably not going to make another big move. I just want to see how the summer shakes out and what's happening with the recovery and all of that before I decide to take that 15% cash position and redeploy it. I still have some concerns. It's probably just the worry rat in me, or worry wart. I don't know, whatever it is. I'm just concerned that there will be some hiccups, and I just want to see some signs that things are going well before I redeploy. I know the whole saying about, time in the market is more important than timing the market, but can't help it. This is what I do. So it is what it is. The one thing that I've started to firm up is, having an investor policy statement that guides me in what I'm doing and gives me permission to do what I do. So, at a broad stroke, I'm going to basically divide my portfolio in half. And in half of the portfolio, I'm going to continue to pick individual stocks. I think it's worked really well for me over the past, 20 years or whatever it's been. You can still argue that that's a relatively short time frame, and it could be mostly luck, and it could be, I fully admit it. But as I get older and closer to pulling the trigger, I am adjusting so that I take on less risk and am willing to give up some returns for it. So right now, I'm going to give myself permission to invest in individual stocks in 50% of my portfolio. And in the other half, I'm going to go with an allocation that is broader, includes some uncorrelated assets and commodities and other things just to help kind of buffer the overall portfolio in terms of drawdowns and volatility and things like that. But the moves that I've made in the portfolio since last month, and that has brought my cash position from 22% down to 15%, is that I picked up a bunch of financial companies just because I think that they've been beaten down and there's an opportunity for them to go back up compared to other sectors in the market. So a big move there was just to buy some financial companies. I'm using the ETF XLF for that. So far, I'm happy with it. The other big move that I did was to pick up some gold. So I'm buying the GLDM, so it's the S&P 500 Gold Trust mini shares, and right now that's making up about 1 to 1.5% of the portfolio. So long term, depending on how the market does, I'm going to redeploy that cash and buy some long-term bonds as well as some additional gold shares and pick individual stocks with the rest of the portfolio. So that's where we're sitting at the end of March 2021 and the end of the first quarter. I hope this ride continues, so if I can get this same outperformance of the market through the rest of the year, I'll be as happy as a clam. So that's where we are. All right, guys. See you later.